So live, we are on live now.
Okay, sir. Hi, friends. Everybody, welcome to Maruti Coaching. So even let it be a lockdown, we are professional course students, and we should have that hunger to read. So as never before this time, the Finance Act is actually amended 3 times by Finance Act number 2019 1, Finance Act 2019 number 2, and Taxation Amendments Act ordinance. I mean, it was first passed as an ordinance, and it was then converted into a Taxation Amendment Act. So this actually has a very good importance in the CA examinations, especially at intermediate level. So let it be a lockdown. We cannot have live classes, right? So we have YouTube virtual live classes. And not taking much of the time, let me introduce the speaker for the day. It is CA TG Suresh. He is a chartered accountant, he is a CMA and also a CS. He is the founder of Maruti Coaching, and he is also founder of Suresh and Balai Chartered Accountants. He is in teaching field for more than 30 years and has created many rank holders, and also he has taught for more than 1 lakh students, and also he actually has enormous knowledge in the field of taxation. So without taking much time, over to you, sir.
Thank you, Karthik, for the wonderful introduction. So, friends, as pointed out by Karthik, so this time, so we have three, not one. So, three amendments. Normally, one budget amendment alone will be there. But this time, there are quite a few. So, Finance Act number 1, then you had Finance Act number 2, then you also had a Direct Taxes Amendment Act. So there used to be one film dialogue which used to be rendered by Rajinikanth's son-in-law. So he used to say that பாயசம், so he will used to say a wonderful this thing. நாங்கெல்லாம் வந்து பாயசமே பாயசம் மாதிரி குடிப்போம், பாயசமே கொடுத்தாடிமா. So likewise, so normally if there is one amendment is there, the CA examiner will bounce on it. But if you're going to have multiple amendments, three different acts, then it will be a great, phenomenal opportunity for us. So therefore, we'll not leave that opportunity. So this is going to be, as I said, it's going to be a very, very exciting session. A lot of amendments, and quite interestingly, if you're an intermediate student, the amendments were made in the areas where the examination pattern itself suggests I have to ask. For example, amendment in tax payable, amendment in salary. If you see the last 3 exams, house property is there for every exam. If you see capital gains there in every exam. So if you see deductions, there is a separate marks allotted for deductions. TDS, there's a separate question. Filing of returns, there is a separate question. In each of the major areas where the questions come, some wonderful, beautiful, important amendments were made. So that makes this amendment session very, very important for both inter and final, but more particularly for intermediate. I'm sure this session will fetch them substantial marks. Even if you get 40 out of this 3 hour session, or 30 or 40, that would be a great takeaway. Feel free for any questions you can put chat. Karthik will summarize the questions and put me in the last 15-20 minutes. So without wasting further time, let's proceed further. So as I said, the amendments to the assessment at 2021 are made by Finance Act 2019. Though I made it as Finance Act number 1, it's actually called as Finance Act 2019. This was presented by Mr. Piyush Goyal before the elections. He made a small presentation, few amendments he made. Then Finance Act number 2, 2018, post the new government took over. Honorable the Finance Minister now, Mrs. Nirmala Sitharaman, presented this. And then due to slowdown and economy, the lot of slew of measures were actually announced for reducing the corporate tax rate and give higher depreciation for motor car, buyback tax been changed. So likewise, some few important amendments were made by the Taxation Laws Amendment Act of 2019. So three acts, one assessment tier, absolutely for the persons who are following tax. This will be a big treat. So it's a treat which I would like to enjoy. It's a treat in ITC grandchildren. So it's a treat ice for all of us. So now this is going to be our agenda for the day. Since the after your multiple choice question, 30 marks in OMR sheets which you have to write, the first question is going to be on total income and tax payable. We're going to be on a question on total income and tax payable. The first segment of rates of tax, surcharge, rebates become very important. Salaries, very small change relating to standard action. Then you also have income from house property. Two very important changes were made in income from house property. Profits and gains from business of operation. One very important change relating to depreciation on motor car is made. Looks like almost certain for your examination. Then again, a very important change in capital gains in section 54. You are allowed to get exemption for more than one house. Looks like another very important provision is almost near certainty for this exam. Then you have another very important change in income, not in income from other sources. Section 9 of the Income Tax Act has been amended to take the income from other sources relating to gifts to a non-resident as deemed to accrue or arise in India. Again, given the background that income from other sources 56 to 10 is such a very regular question in the examination, I think this is one more area where you'll spot out. Deduction from gross total income, Chapter 6 deductions has always been one of the very important areas at the intermediate level. So a couple of new insertions like 80EA, 80EEB. So again, very important at the intermediate level. And tax deducted as source. There is a separate question on TDS. Lot of amendments in TDS, both for inter and final. I think that should be separate marks is there. So many amendments. I think this is one area where you have to closely watch out, both in multiple choice questions and also in the descriptive questions. So if you see all the changes, they're very important from the examination point of view. As I said, any examiner will be allowed to set the paper for this because he's got so much in his hand. I'm sure I would have loved to set this question paper. I would have given some 30-40 different question papers for the institute to choose. That much is the available opportunity. So this is the segment, as I said, in the rates of tax. We'll discuss about surcharge, 87A debate, non-applicability of surcharge for capital gains. Then we'll have in the salary increase in the standard action. So then in income from house property, more than one house can be taken as zero. You may be aware of. You can take normally only one house as self-occupied. Now you can take two houses as self-occupied. So, and similarly, annual value of unsold stock of a property developer. Earlier it was 1 year, now it is 2 years. So then you have profits and gains, higher depreciation on motor cars, and additional payments mode for certain sections. Capital gains, amendment of section 54, amendment of buyback of shares. So income from other sources, 56, 210 and 918 insertion. Deductions from gross total income under Chapter 6A. Insertion of 80E and 80EB. And the last segment which we're going to discuss, advance tax, TDS and filing of tax returns. Insertion of section 194M, 194M. Amendment of 184A, 184DA, 194I, 194IA, and 201, and of course, new criteria for filing tax returns or voluntary filing of return of income. Quite a lot of interesting changes have been made. So this is what we're going to do. All the amendments or most of the amendments, I'll put it that way, we'll just try to discuss it with the help of some examples so that you can understand and appreciate the provisions better. So let me first move on to tax rates, the first segment of this. So there is no change in the tax rates except for a company. So companies will have a reduced rate of tax up to a particular turnover. Of course, they also have a very optional provisions under Chapter 12 of the Income Tax Act to opt for either 15% tax or 22% tax. At the intermediate level, this is not there. Today's session will focus more on the provisions relevant to the intermediate. So I will be discussing about the rate of tax of the companies. Our surcharge, already we had 10% surcharge and 15% surcharge up to assessment year 1920. So now you're going to have two more additional surcharges, 25% and 37%. So surcharge will be 25% if the total income exceeds 2 crores but does not exceed 5 crores. Surcharge will be 37% if the total income exceeds 5 crores. So we're going to have two extra surcharge. That means effectively we will have up to 50 lakhs no surcharge. 50 lakhs to 1 crore, we will have 10% surcharge. 1 crore to 2 crores. Up to last year, once you cross 1 crore, only one surcharge of 15%. Now 1 to 2 crores will have 15%. 2 to 5 crores, you will have 25%. And once you cross 5 crores, you will have 37%. So what I will do is, I will give you the comparative between assessment in 1920 and assessment year 2021 so that you can understand and appreciate these provisions better. So what is very interesting about in the direct taxes amendment tax, so what they have done is they said this additional surcharge will not apply for capital gains coming under section 111A or for capital gains which is taxable under section 112A. Both 111A and 112A are applicable for listed shares or shares of an equity oriented fund. So this is basically a capital market boosting measures. So in order to ensure that the capital markets are not impacted on account of this additional surcharge, the additional surcharge of 25% and 37% have been made not applicable for 111A, which is a short-term capital gains if STT paid. For them, the surcharge will not be 25 and 37%. Similarly, for long-term capital gains under 112A, you will not have this 37% additional surcharge. That means for two sections, 111A and 112A, surcharge will not be at a higher rate of 25% and 37%. That's a very, very important provision. We'll see them with examples later. Then 25% tax rate to companies, so whose turnover does not exceed 400 crores. Up to last year, it was 250 crores. As I already mentioned to you, apart from this, companies will get a 22% tax rate if they forego certain benefits. The companies which are going to start manufacturing operations from 1st October, if they forego certain provisions, they will get 15% tax. So you will have 30% tax, 25% tax, 22% tax, 15% tax. For corporates, there are so many tax rates are there. We will have a separate session for that because that is applicable only at the final level. At the intermediate level, the provisions relating to individual alone are important. In today's session, we will not be discussing anything relating to the corporates. So let me stop with that as far as the company tax is concerned. Rebate under 87A has been increased to 12,500 from the present 2,500, and the total income limit for availing the rebate under section 87A was increased to 5 lakhs from the present limit of 3 lakhs 50,000. So what I would suggest before I proceed, so please do keep a notebook and alongside. There is nothing like writing down some notes, which are always very important. So if say, we always used to say one thing: if you're a CA student, you should always go with a notebook and pen anywhere you go. So whenever you get an opportunity, just keep writing down notes wherever you go and make an observation. Please do it. So any doubts, put in the chat box. We will answer that question. Maybe we'll take all your doubts in the last 15-20 minutes. Keep a notebook, keep a pen, have a calculator nearby. So enjoy this session. So it's going to be really a very, very useful session, and you will get some very huge, I will say, the huge marks is awaiting you. That's what's most important is the amount of the marks today's session is going to get, apart from the knowledge, is going to be huge, humongous. I'll put it that way. So with that small intro, while let me just proceed, continue. I hope that you already, all of you, are having with you the pen and pencil which I've been talking about. So, so again, this is the surcharge which was there for the current year: 50 lakhs to 1 crore, 10%; 1 crore to 2 crores, 15%. So these two surcharge rates were also there in the last year. That is, I mean, assessment in 1920. 2 to 5 crores new surcharge, 25%, and more than 5 crores new surcharge, 37%. What is very important, you should note the difference between the tax, surcharge, and cess, which are very important. Now, a surcharge is something which is collected as a temporary measure. So even though it has become a little bit of a habit now to collect this amount by way of a surcharge, in India, on the lighter side, we can say surcharge has become temporarily permanent. So we can say that way. So it has almost become a new norm now. So every time the government will want to collect more revenue, instead of increasing the tax rates, they go by way of a surcharge route. Now, one point you must bear in mind, that tax which is collected is going to be shared with the state government and the central government. That means a normal income tax will be shared between state and the central government. However, the surcharge collected by the central government is going to be kept by the central government with itself. That means the surcharge is not going to be shared. That is one thing which you should bear in mind. There is a question mark as to whether you should collect the tax by way of increasing the surcharge, because it is a federal system. So where the central government collects the tax and shares with the state government. Therefore, should we have to collect anything which is not going to be shared? That is always a debatable point when you collect as a surcharge. More than anything else, this information I'm just trying to give it to you so that you can retain the provisions better. The second point is on the cess. Cess has to be used for the purpose mentioned. Earlier we had 2% education cess for primary education, 1% for secondary and higher education. So totally we had 3%. Now the 3% has now become 4% towards health and education cess. Though we don't have the bifurcation, how much out of that 4% is for health, how much is for education, they collect 4% together. This is also not the best practice, because when you are collecting as a health and education, the split is better, because whatever you collect by way of a health has to go to a different, possibly, the Union Health Minister, Mr. Harshvardhan, is in news every day. So therefore, his ministry will get the share. And education days will go to a HR, Human Resource Development Ministry. So therefore, the cess has to be used for the purpose mentioned there. That is what is very important. So that is about cess and about surcharge. And there is a lot of confusion in the student's mind while applying the surcharge and cess. When you say 10%, 15%, 25%, 37%, you must understand this is not over and above your slab rate. It is not 30 plus 10, 40. It's not 30 plus 15, 45. It is not 30 plus 25, 55. It is not 30 plus 37, 67. So the 10% surcharge will be applied on the tax. That means if your tax rate is 30%, 10% of that will be another 3%, 33%, plus of course 4% cess that once you cross 50 lakhs, the second table, the new effective rate of tax for income above 50 lakhs will effectively move to 34.32. Or similarly, if you are between 1 to 2 crores, it will be at 35.80. That means 30% tax is 30 means you will apply 15% because if your income crosses 10 lakhs, your tax liability is 30%. So therefore, I will, if your income crosses 1 crore, you will have the 15% surcharge you have to pay. So 15% will be applied on 30%, which will come to 4.5%. So 30 plus 4.5, that will go to 34.5%. On that, you should apply 4%. Please remember, health and education cess will be applied on tax plus surcharge. So many students, what they try to do is they take 30 plus 15 plus 4. No, 15 is on 30 and 4 is on 30 plus 4.5, 34.5. That is one reason why I given you the effective rate of tax. So the idea began giving the effective rate of tax so that you can understand 15% is not over and above 30%, it is on 30%. And similarly, that 4% is not separate 4%, that is on the tax plus surcharge. So very important point. A lot of students do this mistake. Now just look at when you have an additional tax of or rather surcharge of 25% and 37%. There was a huge backlash because even a lot of foreign investors are classified in the category of association of persons or body of individuals. So they suddenly felt that the Indian stock market will not be attractive for them for such a huge rate of tax. So the foreign institutional investors, the foreign portfolio investors, we can call them as an FPI, foreign investors, portfolio investors, got jittery when this budget was pronounced on 5th of July that this will make them rethink about investing in Indian capital markets because of the huge tax rate. Now, just imagine a 37% surcharge. So, because most of them will have that much amount of income. So, therefore, the government subsequently brought a Direct Taxes Amendment Act, which both for Indian investors and foreign investors reduced the surcharge rate. That means the surcharge rate increase of 25 and 37% will not apply for capital gains coming under 111A and for capital gains coming under 112A. 111A is a short-term capital gains on sale of listed shares or equity-oriented fund, units of an equity-oriented fund. So where the surcharge will continue to remain beyond the limit of 15% will never go. So therefore, the government also therefore to clarify this position. So we asked whether this capital gain should also be included for the purpose of determining the surcharge for other income. So therefore, they brought in 5 different situations. The 5 different situations are very important. Watch out for this from the examination point of view. Situation one, the total income including capital gains. When we say capital gains here, please understand the capital gains here means only 111A or 112A only, not any other capital gains. Both 111A and 112A will apply for listed shares and units of equity oriented fund if STT is paid. STT is nothing but security transaction tax. So including capital gains exceeds 50 lakhs but does not exceed 100 lakhs. Surcharge on capital gains will be 10% for capital gains, 10% for other income. If your total income including capital gains exceeds 100 lakhs but does not exceed 200 lakhs, read it as 1 crore and 2 crores if you're comfortable with that. Surcharge on capital gains will be 15%. Surcharge on other income will be 15%. This is basically the situation which existed up to last year. Therefore, there is no change in these provisions. That's what you should understand. So 1 and 2, The situation which we are already there even in assessment year 1920. So therefore, 3, 4, and 5 are the one which is the result of the Direct Taxes Amendment Act, which specified this increased surcharge will not apply. The increased surcharge will not apply for 111A and 112A. So for 111A and 112A, this will not apply. So therefore, how they're just trying to give it here. If your excluding capital gains exceeds 2 crores but does not exceed 5 crores, please be careful. In the first two, we are talking about including capital gains. The next two, we are talking about excluding capital gains. And in the last situation, we are talking about once again including capital gains. 5 situations, 3 of them we will include capital gains, 2 of them we will exclude capital gains. In 3 and 4, it is exclusive of capital gains. If capital gains exceeds 2 crores, that is total income excluding capital gains exceeds 2 crores but does not exceed 5 crores. Listen, it's not a very difficult situation. I want this surcharge on capital gains to remain at 15%. So my income excluding capital gains crosses 2 crores but does not exceed 5 crores. Therefore, I want to charge surcharge only on other incomes at higher rates. So therefore, look at the next column. If my income excluding capital gains, that my other income exceeds 2 crores but does not exceed 5 crores, I will apply surcharge of 25% on my other income, and my surcharge on capital gains will be 15% only. At no point of time, please bear in mind, your surcharge will exceed 15% for capital gains coming under 111A or 112A. No point of time. Always keep that in mind. So, excluding capital gains, if your total income exceeds 5 crores, surcharge on capital gains will be at 15%, surcharge on other income at 37%. Again, this is a very simple logic to understand and appreciate, because if my capital gains exceeds 5 crores, my income exceeds 5 crores, I should have paid 37% surcharge. So I don't want that increased surcharge only to be not applicable for capital gains alone. So that's what this table tries to summarize. The last situation, it's a very interesting situation. Including capital gains exceeds 2 crores, but it is not covered by situation 3 and 4. If you are coming under 3 and 4, you should apply the rate specified in 3 and 4. If you are not coming under 3 and 4, but in situation 5, so if my income including capital gains exceeds 2 crores, but if you are not covered by 3, what is the coverage of 3? Without capital gains, my other income should not exceed 2 crores. So what is 4? Without including capital gains, my other income should not exceed 5 crores. No, effectively the way in which you should try to understand the situation 5 is that because of capital gains, if you are pushed to total income exceeding 2 crores, you should not be paying surcharge on other incomes at the higher rates, right? So therefore, what the situation 5 talks about, if after including the capital gains, if your income exceeds 2 crores, but your other incomes are not exceeding 2 to 5 crores or 5 crores, in that particular case, because of capital gains alone, you may come, your total income could cross 2 and 5 crores. I don't want to penalize you for that purpose. Therefore, I'm saying you have to pay 15% surcharge on capital gains and 15% surcharge on other income. Even if your total income crosses here 2 crores, the surcharge on other income will remain as 15% if you satisfy situation 5. So what I'm going to do is, we take the situations. I will give you what could be the tax rates. I will give that some time for you to work the answer on the same, and then I will take up the answer for that question. So we'll just have a very quick before we go to the questions. So we'll take the rebate and then take some 3-4 examples on the tax rates here. Rebate under section 87A before amendment. At present, rebate under section 87A will be available up to 2,500 if the total income does not exceed 3,50,000. This is, we are talking about the position before the amendment or up to assessment year 1920. It is always better for you to know from the point of view of examination what is the current position and what is the position thereafter. Then you can always understand the equation much better. So you have to today decide how you are today at 10 o'clock, and then you decide what you are at 1 o'clock. That's always be better. So then only you know that whether you progressed or not. So that's what we are adopting in the case of amendments also. What is the position for 1920? What is the position for assessment in 2021? What are the implications? And how do you tackle this from the examination point of view? 2,500 is a rebate up to a total income of 3,50,000. Also bear in mind, 87 is available only for individuals and only for resident. So non-resident individual don't get 87A rebate, and HUF don't get 87A rebate. Very careful, no rebate under section 87A for HUF. What is the amendment? So section 87A has been amended to provide that rebate will be available up to 12,500, and the total income limit to get the rebate has also been increased to 5 lakhs. It's pretty easy for us to understand. If you take maybe another 30 seconds to 1 minute to understand what the finance minister tried to do here. I don't want the people having income up to 5 lakhs pay tax. So what are my options? Increase the basic exemption limit from 2,50,000 to 5 lakhs. That's one option. Alternatively, give the benefit by way of a rebate. Now, so here are the two options. Now, if I increase the basic exemption limit from 2,50,000 to 5 lakhs, now let's just for the benefit of all of you, once again recall the slab rates applicable for individual HUF, AOP, BY. First 2,50,000, zero tax. 2,50,000 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30%. If you are an individual, senior citizen, resident in India, instead of 2,50,000, 3 lakhs. Up to 3 lakhs, 0. 3 lakhs to 5 lakhs, 5%. 5 to 10 lakhs, 20%. 10 lakhs and above, 30%. So again, if you take the case of very senior citizen, up to 5 lakhs, 0. Rest of the slab rates are same, which is 5 to 10 lakhs, 20%, about 10 lakhs, 30%. So this is the present slab rate applicable for an individual. Now, if I increase the basic exemption limit from 2,50,000 to 5 lakhs, there are going to be two consequences. So I come under the last slab rate. So my income is about 10 lakhs. So if the basic exemption limit has been increased to 5 lakhs, even I will get the benefit of 12,500. So 2,50,000 to 5 lakhs, the rate of tax is 5%. That means that 12,500 will also accrue to me. The government feels person like me can afford to pay the tax. Why should I get 12,500? Why should a Mukesh Ambani get 12,500? So why the people having higher income should get the 12,500? Therefore, they say up to a total income of 5 lakhs, I will give you a rebate of 12,500. Thereby, the increase in the tax benefit or higher base amount for non-paying tax is confined only to the people in the bottom of the pyramid. That is the idea behind why there should be 87A, because a lot of times people ask the question, so why not they increase the basic exemption limit? The second and the most important point, the second and most important what you must bear in mind, if my total income goes up from 2,50,000 to 5 lakhs, the number of people filing tax returns will dramatically come down. All of you will be aware of. You have to file your tax returns only if your gross total income exceeds the basic exemption limit. If the gross total income does not exceed the basic exemption limit, you need not have to file the tax returns. If I'm going to put 2.5 lakhs into 5 lakhs, a huge chunk of the people will not be filing tax returns because they are not required to file. No need for them to file the tax returns. So what will happen as a result of it is suddenly the number will come down dramatically because most of the people who are filing tax returns are in the bracket of 2,50,000 to 5 lakhs. That is where we find bulk of the people filing tax returns. In one stroke, number of people filing the tax returns will dramatically come down, which is already very, very low. It will further come down. So that is one of the reasons why the government consciously took the decision only to increase the rebate. Now, having said this rebate is available, you would have known you will not get the benefit of even Chapter 6 reduction for capital gains, short-term capital gains under 111A for lotteries. Therefore, will I get 87 rebate for those incomes? Surprisingly, the answer is yes. Neither 111A nor 112 nor 115BB. 115BB is basically 30% tax rates for lotteries and all. So that is the provisions. Neither of the sections, neither 87A nor 111A, 112, 115BB specifically prohibit claim of rebate under 87A. That means 87A is available for income taxable at special rates. However, 112A specifically prohibits claiming of rebate under 87A. Therefore, for 112A, you will not get the rebate under 87A. So, just to quickly summarize before we catch up with around close some 8-9 problems, keep your notebook and pen ready. I'll give you some 2-3 minutes for you to work out your answer, and then I will start the answer for the question so that you can appreciate. So, the way in which you have done, the way in which I have done, if both of us synchronize, beautiful. In case if your answer and my answer change, you will also know where you are going wrong. So therefore, keep your notebook and pen with you. I'll just give you a quick summary of what we discussed so far. And then what we'll do is we'll catch up with close to around 9 or 10 problems on the tax calculation. All of them very important. They will come in multiple choice. They will come as a total income question. Let's start it. But before that, no change in the tax rates for individual and HUF. However, 2 new surcharges were introduced for income above 1 crore but till 2 crores. So we will continue to have the same 15% surcharge. And once you cross 2 crores, 15% is going to be replaced with 25% up to a total income of 5 crores. And once you cross 5 crores, the surcharge will be further increased to 37%. That means we'll have 10, 15, 25, 37. So 2 new surcharges, but these 2 new surcharges of 25 and 37% will not be made applicable for capital gains coming under section 111A and 112A. Please bear in mind, this will not apply only for 111A and 112A. It will apply for all other capital gains also. To factor this situation, the government has contemplated 5 situations. Situation 1, they talk about a scenario where the total income, including capital gains, exceeds 50 lakhs but does not exceed 1 crore. Surcharge for all will be 10%. Including capital gains exceeds 1 crore but does not exceed 2 crores, 15% for all. Excluding capital gains exceeds 2 crores but does not exceed 5 crores, capital gains will remain at 15%, other income at 25. Excluding capital gains crosses 5 crores, capital gains will remain at 15, other income go at 37%. And including capital gains, it crosses 2 crores but not covered by the 2 situations which we discussed earlier, 15% for all. So rebate under 87E increased to 12,500, and the total income eligible for applying that has been also increased from 3.5 lakhs to 5 lakhs. So this is what is discussion relating to the calculation of tax surcharge. So therefore, what we'll do is it's time for us to catch up with some questions. This is the first question. I'm going to just wait for some time. Take your notebook, pen, write down the question, maybe in a short form so that you don't have to spend a lot of time. So take the question. I will give you the answer after a few minutes. So take the question. So I'll first try for 2-3 minutes, not a long question, so if you can just try, and maybe after few minutes I'll give the answer for the question. Mr. Anshu furnishes the following information. Determine the tax payable. Determine the tax payable by him for assessment year 2021. Income from salary before standard action 4 lakhs. Long-term capital gains under 111A 1,50,000. So you just have a few minutes for you to work out the answer for the question. Right, so now I hope that you have already tried this question. Let's go for the answer for the question. So we have income from salary before standard deduction 4 lakhs. So 4 lakhs minus 50,000 of standard deduction. Now income from salary 3 lakhs 50,000. Capital gains under 111A, that should be read as short-term capital gains. So short-term capital gains under 111A. So 1,50,000. So your total income chargeable tax now comes to 5 lakhs. So now up to 2,50,000, there is no tax. So between 2,50,000 to 5 lakhs, you will have a 5%. So that 5% of 1 lakh will come to 5,000. On short-term capital gains under 111A, so you will have 15% tax. So that will come to 22,500. So the total of tax therefore will come to 27,500. Now, since the total income has not exceeded, 5 lakhs, I'm eligible for rebate under 87A. So I'll get 87A rebate of 12,500. So it should be noted that you are eligible for rebate under 87A for 111A. You are not eligible only for 112A, but you are eligible for rebate under 111A. So I get 12,500. So tax after rebate 27,500 minus 12,500 comes to 15,000. Health and education cess at the rate of 4%. So that will be 600. and the total tax payable after cess will come to 15,600. So what are the key points here? Are one, if you miss the standard deduction of 50,000, then you will take the total income as 5,50,000 and you will not apply the rebate. Right? That's the first point. So the moment you miss out the standard deduction, though it is given the equation as before standard deduction, sometimes the examiner will give you salary from ABC Limited. So the moment they give salary from ABC Limited, so you must understand that is without standard deduction. If they said income under the head salaries, then you can always take that is after standard deduction. Secondly, if you think that the rebate is not available for short-term capital gains in the 111A, you would have given the rebate of only 5,000 a year, and again that would have mean that you would have missed the equation. So it's a very small equation, and if it comes in MCQ, just visualize for a minute. So 4 answers, you have to solve an MCQ equation in about 2 minutes time, and I think that 2 minutes doing that much amount of calculation will become very, very difficult. So classic example of how an examiner can twist and ask some beautiful question in the examination. So what I'll do is I'll just give you again, take your time. Maybe I'll give you another 2-3 minutes time for you to look at the next question. As I said, if you do the question, it will be more easier for you to appreciate the answer for the question. So income from rent from house property 6 lakhs. Long-term capital gains under 112A. So short-term capital gains under 111A, 80,000. So take your time, solve the problem, then it is easy for you to catch up this. Right, so now so it's unlike the previous question, here we have rent from house property. So I've already given a small hint on this in the previous problem itself. So income from house property. So since it is given as a rent from house property, this will be before the standard action. So therefore 30% standard action on this is 1,80,000. So IHB will come to 4,20,000. So short-term capital gains under 111A, 80,000. So the total income will come to 5 lakhs. So 2,50,000 the basic exemption limit. On 1,70,000, between 2,50,000 to 5 lakhs, 5% on the normal rates, which is 5% of 1,70,000. 80,000 is a short-term capital gains under 111A, 15% tax on those. So therefore 12,000 plus 8,500, 20,500. Since the total income has not exceeded 5 lakhs, again you will get a rebate under section 87A, which is 12,500. So tax after rebate of 12,500. So you will have tax after rebate of 8,000. So then you will have cess to be added. So total tax payable after cess will come to 8320. So I will share the slides. Maybe if you want the slides for simultaneously following. So what we'll do is I will take a we'll take a small break, maybe around 11:15 or so, or once this is over. Maybe I'll also share this slide in the WhatsApp. Maybe you can download it. You will give some 10 minutes or 15 minutes break so that you can also have this slide. So the total tax payable has been done for this patient. So if you're finished, then I'll go to the next question. Now, this is a very interesting question. Again, you first write down the question. So, income from salary before standard action 5,50,000. So, long term capital gains under 112A 1 lakh. So, if you spend some time, first try to do the question yourself, and then it will be always more easier. It's nice to see most of you side by side answering the question. Very happy for all of you taking so much active participation. That shows this spirit. That also gives you, a sense of satisfaction for you, whether you do it correctly or when you make a mistake. Either way, definitely gives you quite a lot of satisfaction. So it's a very interesting question. This is something which, when you see the answer to the question, will be very interesting. So the income from salary 5,50,000 minus 50,000, 5 lakhs. Capital gains under 112B 1 lakh. Now, this is the most interesting point. This problem number 3, you have to be extremely careful in the examination. Very careful in the examination. Because the capital gains under 112A will be at the rate of 10% of long-term capital gains in excess of 1 lakh. So in excess of 1 lakh, you have to pay a 10% tax. So please don't confuse this particular point with one important aspect of it, that 1 lakh is exempt from tax. 1 lakh is not exempt from tax. You have to pay 10% in excess of 1 lakh, just like your 56 to 10. It's not up to 50,000 exempt from tax, right? Up to 50,000 not exempt. Up to 50,000 not taxable. What if you have in gift of 50,001? 50,001 becomes taxable. The only difference here, you have to pay 10% tax only in excess of 1 lakh. Suppose if you have 1 lakh 10,000 of long-term capital gains, then you have to pay only 10% of 10,000. But it does not mean you are exempt up to 1 lakh, because the moment you put 1 lakh is the exempt. So what will happen here is that your total income will be taken as 5 lakhs and you will rebate the entire amount under 87A. But your total income is only 6 lakhs and therefore you are not eligible for rebate, though the tax on the capital gains will be 0 because it has not exceeded 1 lakh. So rebate 0, no tax on LTCG because it has not exceeded 1 lakh, but you have to pay the tax on this salary of 12,500. So tax after rebate 12,500, cess 400, total tax 13,000. So I find a lot of answers of 13,000 also coming up and some answer of 0, but those who have taken it as 0, keep a watch on this. You would have taken this 1 lakh is exempt from tax. That is one of the reasons why I said You keep a notebook and pen, do the problem, you will know what kind of mistake you are doing. So that is the advantage. So that's about this particular question. Very interesting one. Uh, so that is something which again some of you might have get answer of 10,400 different answers are possible. So always when you do the question, check the answer. It will be always very easy for you to appreciate deprivation. So let's move on to another question. Again, I will just give you 2-3 minutes time for you to go to the answer question. So see the previous question. So Aishwarya is asking for the reasons for this. I'll just come back and explain. So income from salary 5 lakhs says long-term capital gains of 1 lakh is not exempt from tax. And 112A, you have to pay 10% tax on capital gains in excess of 1 lakh. You have to pay 10% in excess of 1 lakh, right? So it is not exempt from tax. That means while calculating total income, salary 550 minus 55 lakhs, long-term capital gains 1 lakh. Therefore, your total income is only 6 lakhs. To get rebate under section 87A, your total income should not exceed 5 lakhs. Since the total income is exceeded 5 lakhs, you're not eligible for rebate under 87A. So the moment you take this 1 lakh as exempt, then the answer for this question completely. It's not exempt from tax. Exemptions are always given by section 10 only. So here you have 5 lakhs, 1 lakh, 6 lakhs. Tax on this 1 lakh is 0 because it has not exceeded 1 lakh. Tax on this 5 lakhs, first 2.5 lakhs 0, next 2.5 lakhs 5%, 12,500. Because you have crossed 5 lakhs, rebate becomes 0. 12,500 says 4% of 12,500, 13,000. So hope you are clear, Aishwarya. So if you're clear, I can proceed to the next question. So again, we will. So again, take your time to read the question. As usual, you will have to try this for maybe 3-4 minutes or 2 minutes. Then we will discuss the answer again. So interest on enhanced compensation, 2 lakhs pertains to the current year, 7 lakhs. Long-term capital gains under 112A, 1,50,000. So what I'm trying is, first question we tried salary, second question we tried house property, third question I'm trying interest on enhanced compensation. Maybe after the answer I'll explain why I'm trying interest on enhanced compensation. So this interest on enhanced compensation is taxable under income from other sources in the year of receipt. Even if you follow mercantile base of accounting, interest will be taxable under IOS and interest will be taxable only in the year of receipt. And what is more important is you are eligible for a standard deduction of 50%. We tried 3 standard deductions in today's session so far. Salary standard deduction of 50,000, house property standard deduction of 30%, and then we will subsequently try standard deduction under IOS also for pension. Now we are going to try a standard deduction for interest on enhanced compensation. So the issue before the Supreme Court was whether this interest on enhanced compensation for persons who are following mercantile basis of accounting, should this be taxed? For people who are following mercantile basis of accounting, should this be taxed on due or accrual basis or in the year of receipt? So with the Supreme Court saying you have to pay tax in year on year, they've introduced a new section 56 to 8. 56 to 8 says you have to pay tax only in the year of receipt. Read it along with 145. If a lot of years interest comes in 1 year, you may be pushed to a higher slab rate, and therefore 57 gives you a standard deduction of 50% of the amount received for interest on enhanced compensation. Now, quickly on 2 points. Interest on enhanced compensation will be taxable on receipt basis under income from other sources, with 50% standard deduction irrespective of method of accounting. So therefore, on this background, IOS 350, capital gains 150 and 112, total income 5 lakhs. Now, therefore, it's very easy for you to appreciate this particular point now. So tax total income is 5 lakhs. Now, my total income has not exceeded 5 lakhs, therefore I'm eligible for 87A rebate. So whereas your tax liability here will be first 2.5 lakhs 0, next 1 lakh you will have 5% tax, and on the capital gains, since the capital gains is 1,50,000, 5% of 1,50,000 minus 1 lakh, so that the 10% of 1,50,000 minus 1 lakh, so on that 50,000, 10% 5,000, on 5% 1 lakh, so total comes to 10,000. So I am eligible for 87A rebate. So what do we expect the students to do in the examination? To claim a rebate under 87A of full 10,000, because 87A rebate is available up to 12,500. Therefore, in all probabilities, people might take 87A as 10,000, take the tax payable as 0, but 112A clearly specifies that 87A rebate is not available for the same. Since the rebate is not available, so what's going to be the effect? You can get only 5,000 rupees of 87A. I'm eligible, but I'll get only 5,000. Very crucial problem, very interesting question. It might come in my MCQ, it might come as a separate question, but be careful. Very, very tricky question, very difficult question from my point of view from the examination, because unless you are exposed to these kind of problems before going to the examination, we will not even know we made a mistake. Everyone will come back and say, sir, I have done the problem right, examiners made some mistake, without realizing that the mistake would have been done by us. Very careful. So 5 lakhs, total income 5 lakhs, the entire tax rebatable. That's all, because we also think that up to 12,500 the rebate is available, right? Therefore, you will put rebate of 10,000. Beautiful question. We will not even know that we made a mistake on this point. So I'm very, very, very happy that some of you are getting it right. That's a brilliant one. So that shows that how beautifully you're focused on the subject. If you got 5,200, it's a brilliant answer. So we'll now go to the examples with surcharge. So situation 1, including capital gains exceeded 50 lakhs but does not exceed 1 crore. So let's go back to each of the scenarios there. So now we'll, including capital gains exceeds 50 but does not exceed 100, 10, 10. Including capital gains exceed 1 crore but does not exceed 2 crores, 15, 15. Excluding capital gains exceed 2 crores but does not exceed 5 crores, 15, 25. Excluding capital gains 5 crores, 1537, including the income under the provisions of 111A and 112 exceeds 2 crores but not covered by 3 or 4, 1515. Just keep note of this particular slide, 5 situations. For all the 5 situations, what I'm going to do is, so we're going to have a question for all the 5 situations. Now, this is the first situation. Take your time to make note of the question. Mr. Krish, a resident aged 65 years, his income details. So I missed one question. Situation. Mr. Ram is a resident aged 35 years. His income details for the financial year 1920. capital gains under 112A 50,000, high HP after standard action 50 lakhs. So this is the first situation we are talking about. So inclusive of capital gains under 111A or 112A is between 50 lakhs to 1 crore. So simple situation. This situation there even assessment in 1920. So the surcharge which you have to apply is 10% for both. So make note of it. You can try the answer for this question. So what I will do is I will go through the 5 situations. Then I will take a break for 10 minutes after going through the 5 situations. That 10 minutes break, you can work out the answer and then come back. So, but make note of the question. Make note of the question. So 35 years of age, financial year 1920, including LTCG, the total income is between 50 lakhs to 1 crore because the total income is 50 lakhs 50,000. As I already told you, if you take 112 50,000 is exempt from tax, then you will think your total income is 50 lakhs. There is no surcharge will apply. Very crucial point. Understand this concept. The moment you don't take 112A in excess of 1 lakh in your total income, you will conclude your total income is 50 lakhs. And therefore, you will come to a conclusion that the tax payable is without surcharge. No surcharge will apply. But you should include 50,000. It's not up to 1 lakh exempt from tax. Up to 1 lakh, zero tax. In excess of 1 lakh, you have to pay 10% in excess of 1 lakh. So make note of the second question. So this is situation 2. Capital gains under 111A 1 lakh, PGBP 1 crore 50 lakhs, total income 1.51 crores. My income inclusive of capital gains is between 1 to 2 crores. Therefore, I have to apply surcharge at the rate of 15% for both. This situation is not different from assessment in 1920. Same situation, same answer, no problems at all. But you have to just only make a note of the income details. I'll give you a lot of time for you to try this question. Maybe we can, as I said, after going through the 5 situations, we can have some 5 or 10 minutes break. At that point of time, you can work out the answer so that I can come back and discuss the answer. Mr. Highgrave is a resident, aged 85 years. His income details for financial 1920. Capital gains under 111A 1 lakh. PGBP 3.5 crores. Capital gains under 112A 2 lakhs. So what we have tried here is excluding capital gains. Excluding capital gains, the income is between 2 to 5 crores, right? Excluding capital gains, exceed 2 crores but does not exceed 5 crores. That is the situation 3. And if you go through the table, if you are in this situation, surcharge you have to apply is 15% for capital gains and 25% for other income. That means on business income tax, I will apply 25% surcharge. And on the 2 capital gains, I will apply only 15% surcharge. This is situation 3, excluding capital gains. If my income is between 2 to 5 crores, 25% surcharge for that income, and for capital gains, 15%. So at no point of time, your surcharge on capital gains should ever exceed 15%, right? So make note of the question. As I said, maybe after seeing 2 more situations, we'll take a small break and then we'll come back. So excluding capital gains exceed 5 crores. That's the situation. Mr. Ganesh is a resident, aged 45 years. His income details for financial 1920. Capital gains under section 111A 1 lakh. PGBP 5.5 crores. Capital gains under 112A 2 lakhs. So that means my business income has crossed 5 crores. My other income has crossed 5 crores. By this time, you can easily get this point. This is in situation 4. My other income crosses 5 crores. Therefore, for my other income, I will have 37% surcharge. And for my capital gains, I will only have 15% surcharge. By capital gains, I mean only 111A and 112A. Last situation, before even I go to the situation, my other income is not the reason for me crossing 2 crores or 5 crores, right? That is what the situation. Capital gains is more than that, but because my capital gains is more than that, my total income crosses 5 crores or 2 crores. And should I be penalized for the same? That is what the next situation. Take this one. My capital gains is 5 crores, my BGBP is 1 crore. If I don't consider the capital gains, my total income would have been only 1 crore, right? If I include capital gains, my total income is 6 crores. That means I have to unnecessarily pay 37% surcharge on business income because of my capital gains. So therefore, what they have done is, if your total income excluding is what, see, as I told you, we have excluding is what we saw in situation 3, excluding is what we saw in situation 4. Excluding capital gains, did it exceed 2 crores but not 5 crores? No, that means I'm not in situation 3. Excluding capital gains, is it exceeding 5 crores? The answer is no, therefore I'm not in situation 4. Now, since I'm not in situation 3, since I'm not in situation 4, so if I'm not covered by situation 3 or 4, and then what I can do is I can apply situation 5. So what is situation 5 saying? So excluding, including capital gains, but just not covered by situation 3 or 4, now I had to only pay 15% surcharge. The idea behind is what you have to understand. Here, because of my capital gains, my business income surcharge goes up to 37%. Therefore, they say that this crossing of 5 crores has happened because of capital gains. Therefore, pay 15% surcharge for both. This is what I would have paid in assessment year 1920. So these are the 5 situations you have. I think you need some time for answering this 5 questions. I just want you to try. Maybe like I need to take some water and have some hot water before starting. So we are now at 11:12. So what we will try to do is, in the same this thing, you can come to the YouTube channel again. So we'll start exactly at 11:30. But this 15 minutes break only for me, not for you. You can also take a break if you have solved these 5 situations. So what I will do is I'll just come back and discuss the answer for these 5 situations starting at 11:30. If any of your friends also want to join, if you feel that this is definitely useful, I feel that some 30-35 marks is there in this. So ask them to also start joining at 11:30. So what I will do is, for the time being, just for 15 minutes, I need that break because so for the last 1.5 hours continuously I've been speaking. So maybe a break will help me. You will also get some time for solving this question. So we'll resume exactly at 11:30, same link. Thank you. We'll resume shortly.